afternoon, everyone. Thank you for joining us today. Today we have an update with Jason Kosec, President and CEO of Integra Resources. We'll be doing an investor update followed by Q&A. Before we get started, as always, today's presentation will contain forward-looking statements. You can learn more about those in the presentation up on the company's website. Welcome, Jason.
Thanks for having me on, Magda. Much appreciated. The essence of today's webinar is just to give everyone a mid-year update on where we're at with our major milestones. I'll give a brief summary of kind of what Integra is at the beginning, and then kind of go into the major catalysts in the kind of the most recent press releases that have been quite transformational. As Magda mentioned, I will be making forward-looking statements. The cautionary note is on the company's website. So Integra, at a high-level overview, as some of you may or may not know, Integra is the largest gold and silver resource endowment in the Great Basin that's not owned by a major mining company, currently sitting just shy of 7.1 million ounces. If people aren't familiar with the Great Basin, it's a geological province that covers southern Idaho, western Utah, pretty much all Nevada, and eastern California. If it was a country, it would be the fifth largest gold producer in the world. That's why we operate in these well-endowed terrains. Between the DeLamar Project and Nevada North Project, at $2,000 gold, we're just shy of $1 billion of net present value and an average of about 50% IRR. Everyone can do the numbers at current metal prices. Today's agenda for the webinar, we'll do an exploration update, drilling update on the feasibility and mine plan of operations, briefly touch on the Sierra Colorado transactions, and then really what's coming down the pipe for the remainder of the year. So as you may know, Nevada North Project located in northwestern Nevada. Right now we're sitting at 1.3 million ounces of M&I, just over 270,000 ounces of inferred. Sits at a PEA level, significant land package, and a lot of exploration upside. Currently, this project has been operated on a notice of intent permit, which only gives us 500 acres of disturbance. We've now be growing that to 400 acres, so we'll see a lot of exploration upside, which I will touch on later on in the presentation. Right now, again, remember that this has been drilled on 5 acres, so you got 1 million ounces payable, 490 million NPV at $2,000 gold, 54% IRR. We strongly believe we can grow this resource by 30 to 50%. Each year you grow the resource, it adds a significant amount of after-tax free cash flow. We will be growing it in the coming years through the drill bit. We are focusing, and really what we're trying to do with this exploration program, you see all the material that sits outside the main pits that I'm circling in white is not in the current resource. Everything I will scribble in blue is in the current resource. So you see that there's significant near surface oxide potential that we can grow the resource. Not only that, the way these systems form is, think about them as a mushroom. So the fluid migrates up these vertical fractures, hits a more permeable horizon, then precipitates the gold out. The area where we believe there's a lot of upside that can be completely transformational for the company is the area I'll highlight in yellow, is in these what we call a bonanza feeder zone. So fluid comes up the stem of the mushroom, hits a more permeable horizon, you get your low-grade mineralization, and then the stem is what we're looking for in some of these holes, like hole 13, hole 15, hole 24, and hole 16. We have currently drilled one of those holes, expect to have results in the coming months. But it's really exciting program, proving the concept that these feeder zones do exist, and they can be potentially quite high grade. You know, historically, there's about 27 adits throughout the property. Only 8 exist within the current pit. So there's significant amount of potential to grow this resource. Not only that, there are a few holes planned inside the pit, as you can see here. What those are is to convert inferred into indicated, and for some more metallurgical sampling and some more geotech sampling. As I mentioned earlier on, 80% of this PEA is in the indicated category. Most PEA's 20% of the material is indicated, and the conversion rate on a tonnage and ounces basis is about 87 to 90%. Quick overview, there's the Wildcat property, just so people can put themselves in perspective. There's Florida Canyon, there is Cool Rochester, okay? What we have done, there's been a lot of mapping, a lot of data compilation. And what I'm showing you here is our new AI target generator, okay? It's built by Verify. Steve DeJong, one of the founders of Integra, is the founder and CEO of Verify. What it is doing is it's condensing 117 different types of data and compiling it into one heat map. We look at clay speciation, structure, lithology, geophysics, a number of data sets that, quite frankly, is too challenging for the human brain to comprehend. And what I will show you is a prospectivity map of where we can really grow the resource and the amount of certainty associated with those targets. So what you see here is this, what I'm highlighting is the current resource. This resource delivers you 1 million ounces payable, okay? All the areas outside that I'm circling are not in the current resource. Why they're not in there is not because of a geological issue, it was strictly a permitting issue. And now we can start drilling outside of those areas, within the blue areas, to grow the resource. You can see where the holes are planned, highlighted in green. So that's looking for the feeder. This is looking for the feeder. That's looking for the feeder. These holes here are going to push most likely the pit towards the east, okay? So you can see that there is a significant amount of growth potential. Everything you see in pink or above is in the 85th percentile of certainty that there is a target there. That being said, we still have to put the drill and wait for the assays to come back for that. Now, if I take you 8 miles to the south portion of the project, there's an area called Snow Squall. This project has never been drilled, okay? There's a lot of surface sampling, geophysics, structural mapping, lithology mapping that are driving the prospectivity of the Snow Squall target. What it seems to us is, as I mentioned, the main hill, you have the stem, mushroom giving you the disseminated cap, high grade below. This seems to be another mineralized center, again, replicating that mushroom and stem and mushroom cap deposit geometry. On the feasibility side, quick overview, Delmar is southwestern Idaho. Right now, the current resource is just shy of 3 million ounces measured and indicated, 142 million ounces of silver, M&I, and then just shy of 500,000 ounces in the inferred category. So it represents about 90% of the current resource is M&I that will go into the feasibility study. What we did last year is we drilled off all of these backfill and stockpiles. So if people aren't familiar with that, Kinross, who was the previous owner, had a cutoff grade of 0.85. Our cutoff grade will be around 0.15, 0.17. So the material that you see here in the PFS, it was modeled as a pre-strip, so it was a cost. Now that material would be going onto the pad. we were able to drill off 42.5 million tons in the M&I category. The combined, all the stockpiles in the backfill is about 60 million tons. We weren't able to drill some of that, like you see here on the toe or up against the high walls due to weather drilling conditions when they were drilled. Should be noted that there is a high-grade component in these stockpiles, and that's represented by the Jacobs Gulch backfill and the Tip Top backfill. What's driving the 470 million NPV at $2,000 gold with 47% IRR is what's highlighted here in yellow. That's 81 million tons, relating to about just shy of 1 million ounces payable. What we're showing here is the stockpiles that were drilled off, representing 42 million tons. So that 42 million tons will be added to the 81 into the feasibility, okay? So a lot of high margin ounces are going to be added to the feasibility. We believe that we could use those stockpiles to optimize the mining sequence and also to extend the mining life. What we're doing right now is critical. From a metallurgical perspective, we're doing a lot of blending studies, load permeability studies, testing the size fraction. And the idea of that is to push out or lower some of the CapEx and the operating costs. It's key to have a good blending ratio for pad stability and increased recoveries, and also looking at the relationship to the crush size to do trade-off studies on that. Right now, what we've done from an infrastructure perspective, in the PFS, we had 2 pads. We're reducing it to 1 pad in 2 phases, lowering the initial CapEx and having a faster recovery time. Some of the facilities that we're looking at is removing the rail veyor that was in the PFS. We're using the existing truck shop, looking at, we still need to do some on-site power studies and moving away from cone crushers and jaw crushers to basically a mineral sizer, which will give us a better control on the clays and increase recoveries. The idea of this is to have a more simple design, gives you more flexibility, less new infrastructure, which will lower your CapEx and your operating costs. The other study we're doing is really with Whittle Consulting, and what they're doing is looking at strategic mine planning, okay? So when you have 2 pits, different met domains, 3 areas of backfill, stockpiles, when you're trying to optimize this in different recovery domains, it becomes very challenging. But with strategic mine planning, you can optimize all of these areas. And what it really does is it looks at cost per bottleneck unit. Everyone says you want your high-grade blocks at the beginning of the mine. What we want to do is your high-margin blocks at the beginning of the mine. Okay, and what that will do is maximize the NPV and improve the mine sequencing, in turn lowering the risk with the deposit. So in summary, what we're doing here is adding to our geological knowledge, incorporating that into our geomet model, lowering the risks. We're adding, another roughly 42 million tons. That's about 500,000 ounces of indicated, increasing the value of the resource, doing the strategic mine plan, lowering the risk, increasing the NPV. From a metallurgical process and infrastructure perspective, there will be 1 heap leach pad that's phased, so lower initial CapEx. Looking at the optimized recovery model, using a blending strategy to give us more porosity permeability, more stable pad, and better leach kinetics through that blending scenario. That'll increase the value, lower the CapEx, and again, lowering the risk. We won't be using a rail veyor. We'll be using existing infrastructure, again, lowering the CapEx and doing some crushing optimizations with mineral sizers and moving away from a cone or a jaw crusher. From a timing perspective, it's a busy slide here. I think what everyone on this call really wants to hear is that our press release for the feasibility is expected towards the end of November, beginning of December. From a permitting scenario, I think this is, the team's done an amazing job with this. You might have seen in December of last year, we submitted our mine plan of operations. A few weeks ago, that mine plan has been signed off by the state BLM, saying it's complete. Now we are in the draft environmental impact statement study. Okay, there's a lot of things going on this slide. What's important is that we believe we will have a record of decision sometime in 26. It should be noted that there are only 3 projects in the Western U.S. that are going through this permitting process. What we are dealing with here is unlike most projects. This is a disturbed site. It is on BLM and private lands. There is no forest service. We don't have major waterways, seeps, or springs. We have no endangered species. We have power to site, roads to site, and again, already impacted site from the Kinross days. So we believe we can hold tight to this timeline because of the state of where we are operating. Quickly on the Sierra Colorado transaction, the project is located in Pima County in Arizona, just over 4,000 acres of BLM and 5,000 acres of ASLD sections. This is a copper porphyry target located in the Laramide Porphyry Belt, just south of Mission and Sierra Rita. There's a lot of historical samples on surface that demonstrate some good copper oxide mineralization, and no real modern exploration since the 1980s. This is a non-core asset to Integra. Integra shareholders were getting no value with this being in our portfolio. So what we did is we spun it out into a vehicle called Greenlight Metals. It is a private US-based critical minerals exploration vehicle. It's tended to be listed on the TSX in the fall of 24. Integra shareholders will retain exposure to the exploration success within Greenlight without directly incurring any more costs. There was significant, Integra spent about $1 million between Millennial and Integra. There were significant payments due in the upcoming years. $175,000 in option payments coming in 24 and 25. A $2 million final acquisition payment in 26. There was, between the ASLD fees and BLM fees, there was about $170,000 per year. And a remaining work commitment of $800,000 that had to be spent by August of 26. So again, removing a lot of the costs associated with the asset, still kind of retaining exposure to any exploration success, and really decreasing our spend for something that was so non-core and so far out in our kind of target generation portfolio. Upon signing of the agreement, Greenlight issued 500,000 shares at 35 cents, so at a friends and family round, to acquire the interests from ITR. Greenlight will reimburse Integra for the 2024 option payment and holding costs, and basically Greenlight will issue another 250,000 shares at market once they sign the agreement They have a 12-month period to do so. If they don't, we will get reimbursed for the 2024 holding costs as well. What's up next? Again, continued drilling at Wildcat. The feasibility will be coming out in Q4, along with the notice of intent. That will start your 2-year clock going through the DEIS process. Next year, we'll continue the resource growth. We expect to complete the DEIS portion of the permitting process at Delmar. And in 2026, we will receive our record of decision and be submitting our mine plan of operations for the Wildcat project. With that, that's all I have for everyone, and I'll gladly open the floor for questions.
All right. Thank you, Jason. So some audience questions. How much are the drilling costs for the current drill program at Wildcat?
All in, including pad building, assays, geologists, drilling, fuel, is about $300 a meter.
Okay, thank you. And we had a question about DeLamar and the CapEx savings that you mentioned. So would these CapEx savings lead to a lower CapEx, or would it be eaten up by inflation when compared to the PFS CapEx?
Yeah, that's a very good question. We believe right now that we can keep the CapEx, very early to say, but the same or lower than the PFS CapEx. I'm not going to start promising numbers right now. We will have a better understanding towards the end of July, but the team is doing their best to keep it below the PFS CapEx. There has been still inflation, so that is there as well. But we believe by removing the rail there, using the existing shops, using the mineral sizer and stuff like that, that we can keep the CapEx below the PFS. And that's really the strategy here for the feasibility, is keep it simple, stupid, maximize CapEx to NPV ratio.
Got it. Thank you. And turning to Wildcat again, can you speak to how the drilling is going so far at Wildcat?
I'll be very careful what I say here, but we just finished our first hole, which is a huge step out. So the first hole is this guy up here. So it's about around 800 meters outside the pit. And what it was looking to do was this hole right here, drilling into this, what we believe is the hydrothermal breccia. So massive step out. What I can say is that, no one has drilled below this basalt. This purple rock that you see here is a post-mineral rock that covers up the orange rock. No one has ever put a hole through it. We were the first ones. And what I will say is that we got through that purple rock, got into the orange rock, which is a fragmental volcaniclastic, and we saw a lot of hydrothermal brecciation. We don't have assays yet, but I will say that it was a great technical success for the team, and really proves the geological concept that we've been working so diligently for a number of years.
Okay, thank you. And we're getting a couple of questions about the cash balance. Do you have an estimate of the cash balance? How long? Oh, go ahead.
18 million US dollars. And like I said, that'll last end of Q2.
Okay, got it. And what is the breakdown on how it will be spent?
So a vast majority of it is with the feasibility and the baseline work. That chews up about $10 million. The exploration chews up, around $1.5 million to $2 million. And like I said, all the permitting and lobbying work will chew up the rest of it.
Okay, thank you. And then turning to DeLamar, please explain what you mean by mineral sizer. Why abandon railveyor?
A mineral sizer basically is how a way you can crush your material. Instead of a jaw that smashes the rock together or a gyro that smashes it on the walls, what it will do is it'll pull apart and crush the rock. So you're basically shredding the material, and it reduces some of the compaction issues that you have with clay that's in your rock. And the idea is that when you smash it together, what will happen sometimes is you get these little pancakes that will have issues once you put it onto your leach pad with the permeability in the leach kinetics. So that's why we are going this way. And not only that, is that our rock is technically soft, so you don't need the jaw or the gyro either, given the rock hardness of the material that we're dealing with. Why we're not using, why we won't be using the railveyor is because the capex is significantly higher than what was in the PFS. Not only that, is we did a significant trade-off study. We went and observed one at Agnico Eagle's Goldex mine, and it is great underground. But when you put it on surface with rain and snow and hills, that causes a significant issue. Not only that, if a railveyor goes down, it's going to have a major impact on your production. If a truck goes down, you got 20 other trucks. So again, keep it simple, stupid is the model.
Okay, got it. Thank you. And can you explain the magnitude of the clay content in material at DeLamar? Do you know the percentage of total?
Yeah, so it's about 20%. So this is why it's very important to have a robust geomet model. So the geomet model will code the block model block by block with all the different attributes associated with that block. So the lithology, clay content, cyanide lime consumption, crushing index, and we build that into our recovery model so that we can look at each block on a cost and recovery basis. So 20% of the clay content in the previous PFS needed agglomeration. But by doing it block by block, it gives our strategic mine planners the opportunity to say 2 scoops from DeLamar, from Florida, 1 scoop from DeLamar in that higher clay zone, so that it eliminates the use of agglomeration, lowering our costs, and giving us, at the end of the day, better permeability through the leach pad.
Thank you. And you touched on the DeLamar MPO acceptance. Can you quickly walk us through the news and why it is so significant?
So what it is the BLM and their third party SWCA reviews the initial mine plan, which we submitted in December. Once they've reviewed it, they deemed it complete. From that point, the BLM and SWCA will prepare a document called the Notice of Intent. And that document will then be brought to Washington, into the Department of the Interior for the final signatures. That's why we have a bipartisan lobbyist group. Butch Otter, 12-year governor of Idaho and senator, is on our board. So him and George and Mark Stockton have been working, quite hard, spending a lot of time in Washington to make sure everyone is updated with the project before that document comes. Under the new regulations that go in July 1st, once your notice of intent is signed off, so that's the next step for the permitting, the BLM is under a 2-year clock to give you your record of decision.
Okay, got it. And then a question about heap leach projects. So there have been several large heap leach failures this year. Would Integra projects be less likely to experience these, and why?
Yeah, so I won't comment on what has happened with other companies this year. But it's our way we mitigate these issues. And commonly, all of these issues that we've seen are tied to oversaturation of your heap leach. So one of the ways we will mitigate against that is the first couple of lifts we put on coarse, competent rock. That rock will be coming from Florida Mountain, okay? And that will allow for better drainage through the pad. Not only that, with our blending strategy, we're mixing competent rock with some rock with a little bit higher of a clay content. That'll provide better permeability. And we'll make sure we have controlled application rates to avoid oversaturation levels. There's a new monitoring system that we're working with that goes on the basically on the bottom of your heap leach pad and will scan throughout the pad, and it'll show you real-time data of fluid flow through your pad, so you can see where areas of oversaturation or ponding are. It's quite a new technology that BHP and Rio Tinto are using. And one of the other things is that we are in an arid environment. Okay, there's not much rain or snow in the areas that we operate.
Got it. Thank you. And then a question about gold price. Given the sustained higher gold price environment, do you have a view on M&A activity?
My view is I don't really comment on where I think the gold price is going, but the majors and intermediate producers are printing money. Okay, so their balance sheets are getting significant healthier, and at the same time, their reserves and resources are declining. And given that we're one of the next permitted projects in the best mining jurisdiction, one of the largest gold and silver resource endowments, I think M&A will be picking up quite quickly. People want NAV exposure to tier one jurisdictions like Idaho and Nevada. And with the intermediates and majors having a much healthier balance sheet and trading at 1 to 1.5 times NAV, there will be more willing to make acquisitions to replace the resources and reserves.
And then a question about another DeLamar question. At DeLamar, where will the processing take place? Will it be at the previous area, or will there be a new pad constructed?
No, same pad, just slightly different design.
Okay, thank you.
So DeLamar goes on, Florida goes on.
Got it. And then have there been any changes to the team or any changes expected this year?
Tim Arnold, who is our COO, retired in December. What we've done is we brought in Scott Olson, who is 17 years heap leach expert for Barrick and Kinross, 2 years at Hanlon Engineering, to handle basically processing, metallurgy, and infrastructure. We have Raphael Duteau, who is a PhD in geostatistics and resource optimization. So he'll do all the strategic mine planning in the pit, then basically hand the material to Scott for processing. So that was a change. We also, Josh, our EVP of Investor Relations, has moved on to our sister company, Verify, and Jason Banducci will be filling that role as VP Corporate Development.
Okay, thank you. And then what sort of feedback have you been getting from your largest institutional shareholders?
Keep up the good work and don't take the foot off the gas pedal.
Awesome.
Like I say, unfortunately, we can't control the market, but what we can control is delivering on what we say we're going to do on time and under budget. And we demonstrated that last year. We're demonstrating it this year, and we'll continue to do so. And at some point, market will give you value. I think what will happen, frankly, is majors are going to be trading at a premium, driven by generalist money coming in the space. Specialist money will recycle that money down cap into the developer space, and in turn moving our valuation higher.
Got it. Thank you. And just an audience question: if this are the slides presented here going to be available on your website or just in general?
Yes, they will.
Okay, awesome. Thank you. And as we kind of wrap up, can you give us a rundown of the major news items investors can look forward to over the rest of this year?
Yeah. So basically, the major news items that we're going to be having is first, obviously, the drill results coming out of Wildcat. Most likely, the signing of the notice of intent and the feasibility. That's kind of what's on the docket for this year.
Thank you. And is there anything else you wanted to cover today that we didn't have a chance to get to?
No, I appreciate everyone for joining. If there's any other questions, feel free to reach out to me at any time. Gladly speak to anyone over the phone or Zoom. And thank you, Magda and Adelaide, for hosting.
All right. Well, thank you, Jason. Thank you to the audience. And have a great afternoon, everybody. Thank you.